And good afternoon, everybody. This is Michael Filicaro. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Tuesday, May 18th, 2021. Today's trade was really very range bound until the very last few hours of trade this afternoon. In fact, the market just kind of held a very tight range that you can see all right in there. And this is after the Globex session started with the push higher. It got up to, I think, 28 or somewhere in there. Yeah, 32, excuse me. And then it began to drop. By the time the market opened, they first made a push up, then they made a push down, but it was very range bound along the way. And then for the next 2 hours, it stayed really in a very tight range, making trading really futile. And then right about 11 Pacific, 2 o'clock Eastern, it started to tank. And it went down to a low thus far of 13,181, I believe is that low. And that's just a little bit below the 13,182 and 3/4, which is where the low from yesterday was. Now, what could be going on? I continue to favor exactly how we have it thus far, that the high at 14,064 was the endpoint for the intermediate third wave. We've already put in an ABC down to the lows at 12,915. And that is, we've been labeling it as an ABC, but likely only wave A of our intermediate fourth wave. And if that's the case, then what we're really now measuring out is wave B of that intermediate fourth wave, and that's going to be a rally phase. And so within that, we have that first run up, and that is an ABC up to 13,448.50, and then it started to decline, but then it went back up as it did in Globex, and it came back down. So in essence, this could be wave A of B, that could be ABC, wave B of B, and we still now need to leave that potential for the market to turn and to begin to rally and complete this larger, a little bit larger B wave with a C wave advance. And that would portend that we're now going to start to head back towards these levels that we were discussing yesterday. Now, again, C waves are normally, we relate them to the A wave. And the most common is that C is equal to A in length. And that number comes right here at 13,725, we'll call it. That's where my initial estimation, if this indeed is what the market's intent is that where I would expect it to complete. However, we only really need to get above that high, 13,448.50. And so any of these others, so the second most common is that wave C will be 0.618 of wave A, and that is right there. And that number is, come on, just give it to me. So, no, that's not going to do it. I believe that it is somewhere around, it's just going to futz with me. It's around 13,500. Actually 13,517. Thank you for finally coming through, computer. So 13,517 right there. And that could complete it. And so could the next level, which is 13,564. And then so could 13,610. But that would be the ultimate. So we have all those resistance points coming in to play if indeed this is going to be the market's intent. So we'll follow any upside moves we'll go with, and we'll trade what's in front of us, and we'll continue to go up. So that's the upside scenario for tomorrow. And then depending on what happens, if we start to go up and then kind of just hang out at lower levels, then we'd have to carry that same thought through on Thursday and possibly even Friday. Now, let me take that one down, those Fibonacci's. And now we're going to look at the fact that this is the end of wave B of our intermediate fourth wave, and that it actually kind of ended in a little bit of a failure, or that this was the end of the B wave. This is wave one, this is wave two, and now we're dropping in a third wave. Certainly the way the market kicked in this afternoon kind of pushed that option to the front, that it's actually just a third wave. And if that's the case, then what I want to do is to go up and to look at, I need to go to actually this one will probably do much better and be easier to grab. Because then we're going to be looking at a C wave that's related to this A wave. And so that would be, I can see this, I think I can get this on the hourly chart, which would make my life so much easier. Yes, I can. Okay, let's do that. So now we're going to draw up here. Come on, right there's one. Come on, thank you. Come on. There. And of course, this computer gets so fussy. You have to draw it. I'm going to do it this way. And now I'm going to put that on there. So now we're including that entire A wave. And we're going to connect it to this B wave. And move that up just a little bit. Come on, keep going. We'll put it right there. That works. Okay, so now we can begin to look and see the first support is really 13,175, but that's very small support and it should not really hold. So now let's start to scrunch this up. And remember what we have, again, we have our larger Fibonacci retracements, and that would be for the entire fourth wave, right? So that one we ran from the bottom of wave 2 where this third wave began all the way up to the top of that third wave at 14,064. And these are the Fibonacci's that correspond with that. So we have 12,750, that's where I'm going to call it. And that would be an area that could complete, because in all reality, it is a common endpoint for a corrective wave, an ABC correction. The A wave is pretty large, but that C wave could come down and it's only going to be 0.618. So it's going to be 618 times the length of that A wave. That is the second most common endpoint for a C wave in the relationship as it relates to the A wave. So that could be an area of interest. And I would suspect, and that fulfills it, that the C wave needs to come down and make a new low below that 12,915. And that would do it cleanly and come down in 5 waves, which I mentioned by the time I got there, and we cleanly produced that as well. If the third wave really gets going, if this is what's indeed in force right now, then we still have some larger moves, these are the zones that are going to be more interesting. The most common relationship between a C wave and an A wave is that they're equal in length. That number is way down here at 12,296. So we're actually going to say 12,343, which is the 50% retracement level. And that zone now becomes about a 45 point zone. So it's going to go from 12,443 to 12,295 or 296. So we've got a nice big zone for this thing to bottom in right there. It's a good target to aim for. And we'll see. If it doesn't contain it and end it with the rally then picking back up again, these are our next common zones. And this green line, that is 0.618. That is where the wave 4 correction would have retraced 62% of wave 3. Not real common. Can it happen? Absolutely, but not real common. But we have a lineup here that if it overextends beyond the 100%, the next most common is 1.236 and 1.382. And that all lines up around the 618. Now, if it really gets negative, then this would be our last zone. Below that, it's something else. And we're going to have to go back and realize that maybe this is a much, much larger correction than we expected or anticipated. But that comes into discussion should this occur. These are the zones. First one right here. And actually, you can really say it is 12,750 down to 12,635. that would be the zone. And then this is the next zone right there. And that's the favored zone for me. And then of course, on the outside, we have this one. So, and all I did was I just took our Fibonacci extensions so that I can relate this C wave, if that's indeed what's in force, to the A wave and put some parameters around it. And that's what we just did. So now we have included our upside parameters, and now we have our downside parameters. So we are ready basically for what the market wants to toss out. Pray that it's not another inside day that just kind of just bubbles on itself, because those are very difficult to trade because they're more range bound. And so you don't get those big breakouts in either direction, where quite often that's where you're going to make your bigger money. So make sure that when you're trading that you're able to make your adjustments to what the market is actually giving. So you don't get stuck in a position, you don't get stuck buying what you think is going to be a breakout and it's not, it's just the top of a box. And then it comes back down and then you end up, selling back out. Or selling because you think it's breaking at the bottom and it's not, it's just the bottom of the box. So be real careful when we're trading in a slower manner, the market's not moving very fast, and we're holding between either two moving averages or 2 points on a chart. That's where I'm going to leave it. And our next update will be Wednesday the 19th.